Welcome to Business Beyond Borders, the go-to podcast for CPA firms seeking transformative insights. I'm your host, Laurence Whittam, and with each episode we'll uncover key insights, best practices, and invaluable resources tailored for CPAs. From trending strategies to diving deep into outsourcing and offshoring, our experts will help in all areas of your business. Hey everybody, and welcome back to Business Beyond Borders. So we have a fun episode today where we're going to go over some aspects of advisory that you can really focus on. And again, it's not about necessarily that you have to do the advisory piece, but this is a provider I've known for quite some time. And again, they've worked with a number of firms over the years. And this is an option for you to be able to really think about how to speak to your clients, right? How to add value. Because as we go to all these conferences, we hear from a lot of the speakers talking about we really should be much more advisory focused in our firm, right? We should be adding value to our clients. So this is just one of those options that you can also look into. And again, this is also a hugely valuable aspect to something that a lot of your clients may go through at some point in time where they may need a company like this, right? So without sort of further ado, Brandon Carroll is here today from Layton. So he's going to give a bit of a background about himself and the company now for you. Hey, Brandon, how you doing?
Hey, Laurence. Thanks for having me on. Pleasure to be here. So my name's Brandon Carroll. I'm kind of hailing from Chicago, but I've been in the Northeast for quite some time now. Kind of my background is, I've got a couple kids, third on the way, and, have a past lifetime in music production. And now I've been in the tax finance world for a while. So I'm at a firm, Layton. We're a global firm, French-based. We've been in the U.S. for about 8 years now, but we operate in about 16 countries. We're in the business of helping companies leverage complex tax incentives to free up cash flow. And complex meaning more stuff that requires more technical expertise, research and development, energy efficiency, certain things that require engineering and software developing and those types of skill sets. And that's kind of where we shine. And so we have all different types of service offerings and pretty strong foothold in North America. And like I said, it's good to be on here and give anyone any tips and tricks for kind of what they should be talking about with customers and how we see the market.
So can you tell us just even to start out with, right? If we're a firm, we're looking to, again, we hear all these conversations around let's add advisory to the business, right? I mean, what should a firm be listening for? What should a firm be talking about? How often should they be talking about these types of things with their clients, right? And how do they even address as to like, who should I talk to or even have this conversation with in a lot of cases, right? Can you come up with a few sort of identifying factors as to, especially around what you guys do with firms, as to how they can even address as to who the right person is in their firm to talk to?
Yeah, that's a good question. So, I think the main overlying thing is to look at growth from all aspects of a company. If they're growing their headcount, if they're adding a new service line, adding a new product, if they have new initiatives where they want to accelerate growth or look into some new way of doing things, those are kind of good indicators that means that there might be incentives out there to help them with that growth, right? And that can be a federal incentive. It could be a state incentives. It could be local down to the town or even private. You have a lot of companies that have philanthropic arms that will, donate grants and stuff to interesting opportunities that companies are working on. So as you work with clients, you want to make sure you pick apart, what are you doing with your work staff? What direction is the business going? What are the big goals this year that you want to achieve? And that's kind of how I approach things. And then you see where they're going, and that gives you ideas for what might be something good to attach to that can help them alleviate some of those costs.
Now, would you say for the majority, and again, it may change based on the type of business, it may change based on the size of the business, but would you say this is more of like a somewhat of a yearly conversation to have at least with a client, right? To identify sort of, and is it sort of like a checklist style that really they should have every year? You go and have this meeting with your client and you ask these questions, right? And these are just sort of identifying factors of, okay, are there areas where we can dig into further now before? And again, they don't need to be an expert in this because then they would come to it later, right? But from that identifying factor, would that be the best way for a lot of firms to do it? And is that how they work with Leighton? Like, what are the different models that they would use?
That's a good one too. I think the when you dial in on the activity that a company plans to do, you want to establish a timeline, right? Okay, great. You want to double your workforce, in 6 months, in a year? You are working on 2 new product offerings. When do you want to launch those by? What work is being done to achieve, those deadlines? And so that way you can come up with your own kind of framework around what they're trying to do and when they're trying to do it. So an annual check-in might be great, but if they have 3 big things they're trying to do, which are all at different points in the year, that's going to really stimulate a more active conversation throughout the year than just an annual check-in. And so that's what we kind of try to do is we will always want to attach a timeline to what they're trying to do. And usually if they've been planning internally, they'll have some idea of when they want to, accomplish this goal. Because the other deadlines that we look at in the tax world are you filing timely or on extension? And if you have a tax incentive that you want to leverage, those are the 2 anchors that you have to be cognizant of. Some people might want to get something done by March, but because there's a big tax incentive and it takes some time to leverage it, they might file for an extension to allow them for more time to leverage that tax incentive, so that when they do go to file, they've given themselves enough breathing room to now reduce their liability or have some additional deductions, which can free up some cash flow to do the things that they were talking about.
Okay. And then from a firm perspective, right? So obviously this can become an opportunity for the firm to add additional services potentially, right? And Leighton acts, from my understanding, in different ways with different firms, and you're quite flexible on the model and the approach. Can you share, I guess, the different models that you traditionally work with CPA firms or accounting firms when you're working with their clients? Like, what does that look like?
Sure. Yeah, there's a few different models. I think probably the most common one is something where they see us as a valued partner and they add us, to the conversation when it makes sense. The backstory is that I've developed a relationship with them. Maybe I've had some leads for them, and we've kind of gone back and forth to the point where they feel comfortable identifying where there might be opportunities with certain service lines. I said before, energy efficiency. So we do a lot of work in the real estate space, right? Both commercial and residential. So if a CPA, for example, has a client that has a real estate portfolio, now he knows a little bit better about how to ask certain things about the portfolio, or because it's a tax incentive, he probably knows whether they're leveraging certain incentives or not. And so it can be an easy introduction where we just are folded into the phone call, but we're actually doing the service separately and we kind of have a separate engagement. We have revenue share programs that are attractive. Some CPAs and accounting firms would rather have their client get a better discount or a better, better fee structure or something like that. So we can either share kickbacks, or we can just give their clients a better deal. The other way that we're seeing a lot more traction with lately is more of like a white label option. So they're really actually engaging in more of a reseller relationship where they're vetting the client well enough, and we're having meetings off to the side so that I'm really just kind of fielding the information from the CPA, from the advisory firm, who's getting the okay behind the scenes from the client. And then we're just hitting the go button. And a lot of times we haven't even met the client. And that's okay too, because I think a CPA or someone in that type of financial advisory role is probably the one type of profile that we feel a little more comfortable saying that, okay, they've probably done their due diligence They've given, a lot of times they'll act as the conduit to share a lot of the forms and the documents that we need to validate that this is actually a worthwhile, project to pursue. And we'll go as far to, brand the report with their reporting, with their branding. And so it can really be an opportunity for a firm who wants to actually be able to offer these things. They can do it with like a latent engine operating in the background. They can market it on the website. They can talk about it. They can work with us behind the scenes to become more of an expert, to have deeper conversations. And then when the time's right, it is the least amount of friction when it comes to just working with the client and moving them through all the incentives that they should be leveraging. It's definitely the least amount of friction. And we end up in that scenario invoicing the CPA, who might add some margin on it or however they want to deal with it. But it's a nice, fluid, easy way for a firm that's advisory, that's financial, that's an accounting, to add some of these technical services that they really don't have the manpower to add to their teams, but still come off as a good sized firm that's got a full understanding of everything that they need to be offering, and they can it can be branded as themselves.
So it's funny you again mention it from that perspective, from the manpower side of things, because again, I mean, this then becomes that option of, you don't need to think of it like people somewhat are turning away work in some cases, right? And they're not really looking at the opportunities within their own client base as well to say, hey, there could be more things we can actually help our team with, right? But this is an option now for them to actually not have to worry about that time perspective, that involvement, right? But being able to, hey, I've got my plug and play solution in the background, right, to be able to focus on these types of things. But I need to be able to identify where the opportunities are, right, which does take a little bit of time. But that's where your team sort of comes in and helps work with them in the background to address, okay, what are the types of clients we should look at, right, and then go and have those meetings. So it's good that you don't have to now go and staff accordingly to necessarily be able to do this. This is something that Latent sort of takes care of, right?
Absolutely.
And it's where you don't have to necessarily pass the client along. Some firms prefer that, right? But also you can add this as a service, right?
You really can, yeah.
Makes it more attractive, because there are a lot of large firms, mid-sized firms as well that are offering these services, right? So it makes it more competitive. So can you share a little bit about maybe some of those identifying factors, more so with like, let's say when it comes to the R&D side of things, right? So I personally know a little bit about the R&D aspect, but can you give a little bit of what company size is, what parameters are there, maybe even just from a top 30,000 foot view perspective, that they can say, somebody can sit back from listening to this and say, I do actually have a few clients that could be worth looking into from this side of things, right? And what would disqualify them for that?
Sure. So that's a good way to frame it. So the research credit, the research tax credit, a good no-brainer way for qualifying some companies is, are they in the software business, and are they developing it internally? That's a big green light to say you should be looking at the research credit. It's based on anything that's in technological in nature. So we're looking at hard sciences, and computer science is a big portion of our everyday lives. Most CPAs probably have some software development book of business. And so that's an easy one to look at. If they're outsourcing the work, the plot thickens a little bit. But software is a good place to start. Engineering, I would say, would come right after that. Or even more so, if a company makes anything physical, if they're producing anything physical and designing it, it's a really good indicator that they're probably doing some R&D. And then you also have anything biotech, healthcare related. If there's a lab, those are all good things that probably smell like you should look into this. If they have technical employees, if any employee has the word engineer in their title, and you have a lot of them, those are the very expenses the expenses that you pay those people are what generate the credit. And so those are other really good indicators. There's a lot of markets, that use and qualify for these, but that's probably a good way to look at it. The other two factors are, startup or profitable. If they're profitable, they have tax liability, right? And so traditionally, this credit is designed to reduce that tax liability, or in essence, reduce the cost of the money that you're investing into the research. There's been a little bit of change up in legislation that require you to amortize those expenses, which actually means the credit's even more valuable, because if you don't claim it and you have to amortize, then your tax bill goes up even more. So it's really important that you're doing that properly. For companies that are still at a loss in the first 5 years, you can apply that research credit towards their payroll tax. And so if they have a decent sized work staff, it easily climbs up into six figures just going out the door, just for keeping people on the payroll. It is capped at $500,000 a year, whereas the traditional credit for profitable businesses is uncapped. But $500K a year can do a lot of things for a business, outside of just grabbing that from your revenue. And so that's the easiest way to look at it. Those are some interesting industries to look into. And there's we could go deep on this, but I think.
Yeah, I mean, are there any like financial parameters where you would say that, okay, this size company would be also like a good one to, again, I'm sure it varies based on one to the other, but like a rough idea of that profitability, that what it looks like, or whether it's a certain size company is when they would start to sort of see, yes, there could be an opportunity here, or it's worthwhile looking into it compared to necessarily a different size. Or is it employee count, or what does that look like?
Yeah, so for smaller companies, I would say you want companies that are doing 5 million or less in annual revenue. These non-profit, they're not profitable yet, and they have at least 3 to 5 engineers or technical people on staff that they're paying. Those would be great candidates for the payroll research credit. The other bucket for profitable companies, the sky's the limit. They could, the revenue can be whatever, but we still want to see at least $1 million being invested into research activities. So that could be human capital, technical people. It could be materials and supplies that are going into the research. So we want to see, at least that type of minimum R&D expense going into it. And I'll add that, it's a federal incentive, but it exists in most states as well. And so there's usually a double benefit. California has a phenomenal research credit. It's larger than the federal one. So yeah, those would be good kind of more financial stats to look through when especially on the smaller side, to know that there's an opportunity there and that there's enough spend happening in the R&D space.
Okay. And then what, let's say from a business perspective, because again, more so partners or firms are listening to this, right, from that perspective. So like, again, what is the revenue size opportunity potentially from a client base that they have? Like, what does a traditional project look like from that perspective, where they can, again, what can they build this to in that sense as well? Like if they were to focus on building out somewhat of an R&D team, utilizing Layton as an option, like what have you seen with some of the firms you're working with?
So are you talking about more of like how they're analyzing the R&D costs internally at the company?
Well, from a business, no, more so from a business opportunity perspective, right? Really like, okay, putting some time and effort into really looking at this for an opportunity perspective. It's going to help the clients at the end of the day, but also like from their business perspective, like what can they expect it potentially to look like, right? If they do have clients that you are able to go and do the R&D tax credit or go and do a cost seg project for, like what would that look like for?
Sure. So there's a couple things, the first exercise would be just looking through their book of business with them. And I do this a lot where we'll do client reviews, where we'll just kind of run through companies and we'll flag the ones that have certain attributes, which ones are good at R&D, which ones own their building that they operate out of, which ones have a real estate portfolio, and we'll just kind of make a mark of the incentives that all could make sense. And from a business perspective, there's two buckets to think about, right? There's if we're doing a revenue share, or if you're going to make margin as a reseller, that's one extra added line of revenue stream. But a lot of these incentives are separate filings, which is another line item on the services that a lot of accounting firms provide, right? So there's two opportunities really to flag incentives and help a client leverage them. And then, if at the end of the day, it's lowering their tax bill. We do a lot of grants and incentives work. So it could be a refundable tax incentive. Whatever you're doing, you're putting more money into their pocket. And if you're understanding where they're trying to go as a business, maybe employee morale is down and you help them find an additional $100,000 through tax and incentives. Everyone can get a $5,000 a year raise, and you can still have something left over to do a company party, just like something simple like that versus like pulling from revenue and stretching yourself too thin.
Yeah. No, cool. So now as we start to wrap up, Brandon, I mean, where's the best place for them to find you and to look into it a bit further, right? I mean, I always say it's good to do a bit of research, but have the conversation, right? I mean, at the end of the day, it's very difficult to know until you do a deeper dive into the client specifically, right? But what's the best way for them to reach out to you and find out a little bit more when it comes to this?
Yeah, so I'm on LinkedIn all the time. If you look my name up, Brandon Carroll, and just type in Leighton, I'll probably be the first one that pops up. b.carroll@leighton.com is an easy email to get me at. You can go personal too. It's an easy one to remember, 1-800-Brandon@gmail.com. I think I was one of the Gmail OGs, but yeah, those are easy ways to find me. And what I find most valuable is to have the proper dialogue and to go through a proper series of questions with folks. The last thing I want to do is present to them an opportunity that is not a fit, or that's not going to be the right thing for them. And so it's really important for me that I establish an understanding of kind of their situation, what they want to do, what happens if they don't do it, and things like that. And then I can kind of move into more like, well, based on what you're telling me, these three things, like it would seem like it would be a really good fit and help you accomplish what you're trying to go for. And so I try to take that approach with everyone. I don't want to waste anyone's time. I feel like every year our time becomes more and more scarce. And so it's really important that you have the right conversations when you're supposed to have them.
Perfect. No, I appreciate it, Brandon. And I would just suggest everybody have a think about it, right? I mean, especially with some of the types of industries that Brandon mentioned as well, like there can be a huge opportunity for some of the clients to really get some money back in the pocket and that's essentially coming back straight into bottom line savings that they're really getting, because these are credits and incentives around that, right? So it can be quite impactful for the business. So have a look into it if you haven't already. And again, there are ways and options that can be a bit more hands-on for you if you like to do that type of thing from the advisory and like to be involved in it, right? But they also offer different ways from the perspective of if you need that hands-off approach and you would prefer just to pass it along, but you see the opportunity, right? They can handle that side of things. So very helpful, Brandon. Really, really appreciate you joining us. And again, as a person, very good person to have a conversation with as well, like just to learn a little bit more about it. I know you're not very pushy from that perspective as well, which is helpful. So
I appreciate you having me, Laurence. I would just add that, we've been the most impressed learning what's available for businesses without after they let us take a deep dive. And when you just think about the incentives across the whole country on all different levels, it means the world to businesses when you put something in front of them they had no idea was there. So I think the accounting firms that are going to stand out are the ones that really take that extra time to uncover those little golden nuggets, and we'd love to do that.
Appreciate that. And so we'll post all your details as well. So and again, very happy that you joined us today, and I hope everybody got a lot of benefit out of it. And again, I hope everybody had a great time on Business Beyond Borders today. Thank you.
Thanks a lot.
Thank you for tuning in to Business Beyond Borders. I'm Laurence Whittam, and it's been a pleasure bringing you impactful insights tailored for the modern CPA firm. Remember, the world of accounting is vast and ever evolving, and we're here to navigate it together. For more resources and episodes, don't forget to subscribe and reach out to our experts. Until next time, keep pushing the boundaries of your business and explore the limitless possibilities beyond borders.